Hi. Today is October 27, 2020. This will be an interesting week. The stock market has started up poorly. All major indices were down. As most of the analysts or fund managers probably told you, the market is very volatile from now until end of the election. I agree with this statement. I also agree that the market may pull back and it is the best opportunity to buy in. After the aftermarket has regained some grounds and went to positive territories, AMD, Caterpillar, Chrysler, Merck beat earning estimate. Oil also has rebounded after the virus fears caused heavy losses Monday. I'm not a supporter betting on earnings result. So the challenge sometimes is the market actually have already priced in the future growth that you don't know about. So take an example of CHEGG, which is an online tax company. It dropped 4% after the bell, despite report 17 cents per share earnings versus estimate of 10 cents. In contrast, the F5 network jumped 4% with report earning of $2.43 versus estimate of $2.37 per share. Trillo, TWILLO, has slightly down after the market, even with report earning of 4 cents compared to the estimated losses of 3 cents. AIG popped 7% after announcing it intends to separate its life and retirement business. So as you can see, even though sometimes the earnings were looking better than what the estimates are, the market actually still react unfavorably against the stock. The explanation for that a lot of time is because again, the current price structure or model is already priced in with the anticipated result of earnings. So if they actually don't have fixed price, which will highly beat the estimate, is not going to go better. So what do I think about the market this week? I think you'll be very volatile again, and most likely myself, I'm more leaning to down. Again, you can't be buying the SDOW and TECS as an offset if you're anticipating that the index is going to be down. The market has been bullish since correction at the beginning of September 4th and 10th. For those of you who remember that the market had been slipping down and somebody worried will sell off, somebody were anticipating that was a correction and it was a healthy correction. You have been down after the September 3rd, the highest point, and keep slipping about 22% of the NASDAQ. So if we compare the data and you look at that high end on that day with Friday price before the sell-off, NASDAQ is actually still 4.2% lower, and Apple is showing 17% lower than record high of $134, and Facebook is still roughly 6% lower than record high $305. Amazon is roughly 9.8% lower compared to the year high of $3,552. In contrast, Zoom with the ZM symbol, which the one that very popular these days because of work from home and people were using that to conduct business, is actually 20% higher than September 2nd on the price that compared to Friday, and a year high was 588. So I'm bringing this statistic to you to let you know that if you believe NASDAQ will be bullish, then FAAG should be higher than the current level where it is. I think Zoom, honestly, I think the price is too high, so I don't recommend anybody I know to buy Zoom. I mean, if you look at the price valuations, I mean, 588 even now trading at 520, and maybe it will have another correction for $100. I still remember that on around September time when the market starts selling off, it was about $500. I was lucky enough to buy it at 420 because I set a limit buy and the market was just dropping and selling off so quickly. I got it. The following day would drop it to $380. So if you think about the percentage wise, it's a huge drop, right? It didn't get corrected after 3 weeks plus to get back to the level, and since then you will actually assume was actually somebody argued that's called buy point, and then you keep going up. So you will be surprised to me that Zoom, if they get the correction and down to $400 again, because it's just very, very high. So we will see how the Zoom earnings announcement come about, and what, whether the price will stay at the $500 level at this point, or actually will even jump up to some analysts upgraded the stock to $600 as a target. I don't have any inside information, as I told you before, so especially whether these big techs for the announcement week will meet the estimate, but I'm more leaning to say yes. So as I told you, I already make the prediction of this week. I think today the market should probably have some rebound, but over the week will be down. So what to buy? Over the next couple of weeks, definitely from now till the elections, I recommend these few stocks. CMS, Salesforce. This stock has strong and growing revenue, and is added to Dow Jones Industrial Average because the Apple split. So they were designing and thinking through and pick and selected this stock and say this will be balanced out. The possibility of our rack or misrepresentation of the Dow Jones Average. And if Apple was after Apple split, so they add this stock. So I really think this stock have very good potential. The highest was 270-ish, and we are at $240 as of yesterday. So it was really a good buy, good deal there. And IBM, the current price level went back to 2018. Not long ago, the company has announced to split the service business, and then the stock would jump 7 to 10% that day to 130-ish. So the company also had contract with government, and again continue to grow, and the revenue number was actually higher than 2018. So I really think this stock would be one good to go if it's around 110 level. The third stock would be Intel. The company is very strong, financially strong and solid. The only problem was the investor were concerned about when they're going to make the next generation chips that prepare for a faster processing phone and so on, and video games. So Q3 revenue was 18.3 billion, which is down for 4.7% year-to-year comparison, but still beat the consensus. The market, like I said, the market is concerned about that, but personally, I think from my learning experience, it's all about timing. I hope the Intel management won't be so slow, and the research shouldn't take that long to develop that new processing chips. When it's up to speed, then I think they will gain a lot of market share, or this concern is going away. The one more stock that I picked it up because of yesterday, SAP. So I was coming from the oil and gas industry, and I know a lot of oil and gas company and a lot of big corporations actually using SAP. Somehow it was coming up some disappointment, so the stock had dropped significantly, over 20%. I haven't seen that prices for a long time, so I think it's really good to buy an SAP for a long run. One other one to compare is Blackline. The Blackline has been really going up, from like $80 to like as high as $110. So I think like just to give you a comparison, right? Blackline was a much more newer tool compared to SAP. Have been sitting for a long time, so I think it is a good one for for maybe 6 months to a year. I'm pretty confident about this SAP's this stock. And also I also talk about the China stock that you should be focusing on, which is PDD, BABA, and TCHY. BABA Baba against Ants Group is going to be issuing an IPO very soon in Shanghai and Hong Kong stock market. the valuation or prediction that there will be the largest IPO since, you know, either bigger than the last time Saudi Aramco did the IPO. If you like my video, what I just said, please subscribe and also click the notification bell so you will know when I upload a new video. Thank you very much today. Again, let me know and send me an email if you have any questions.